Hello everyone, I hope everyone leaned bullish today. In today's video, basically going to explain why I was saying to be bullish today and what the next steps are for the market. To give a quick recap, basically I was saying that from Friday's close, right here, this is the SPY, right? Friday's close, when it closes like this, the day afterward, so today, we almost always get another move to the upside. So that's why all day today I was basically saying to just be bullish. So now we're going to see what the next steps are. So we're going to take a look at the S&P 500, the NASDAQ 100, the Russell 2000, the dollar, the bonds. We're going to take a look at the larger tech stocks. We also have to keep in mind that Nvidia has earnings on Wednesday after hours and the Fed speaks Friday afternoon. All right. So without further ado, let's get started with the video. All right. So this is a chart of the dollar. Let's bring it back 1 second. All right. So the dollar is very, very important because it has an inverse relationship to the market. So if the dollar starts to show some weakness, then that means that the market is going to bounce. So what happened here was that the dollar was starting to show resistance and weakness at very important levels of resistance. It couldn't break above. So if the dollar was having trouble breaking above, that meant that it's bearish, which meant that the market was bullish. What ended up happening today? The market bounced. So basically we were taking a look at that. We were looking at that in yesterday's video, and basically the dollar failed to continue breaking up and instead is now trading within this range and painted a nice little red candle. So there's that on the dollar. All right, so the dollar clearly does not look exceedingly bullish. All right, next, let's take a look quickly at the bonds. All right. The bonds are actually one of the reasons why continued bullishness might not be a huge chance, because the bonds have a more correlated relationship to the market. Obviously the bonds, they fell today, but the market was green. But the bonds have a more correlated relationship to the market. So if the bonds are falling, right, then that is bearish for the market. Obviously, we made another low, right? But what I was showing was that the bonds are in a very, very bullish pattern here. This is a falling wedge pattern. And falling wedges are generally very, very bullish patterns. And if the bonds can hold basically 117.10, then there's still a chance to a big bounce to the upside on the bonds. And basically, if we bounce on the bonds, and that's more bullish on the stock market. So it's tough. If the bonds were also really, really green and the dollar obviously was failing at resistance, it would be easier to be completely bullish on the stock market. But the bonds and the dollar are both basically showing two different signals, really. But the dollar currently is much more important because it's much more sensitive to price movement and everything like that. So hopefully we'll get if we can comfortably break below levels of support on the dollar, and if this uptrend, because clearly we're in a huge uptrend on the dollar, we're overall bullish, but yeah, now we're just in a range, basically moving forward, very, very, very simply now moving forward on the dollar. Whenever there is not a lot of strength and we're not breaking above levels of resistance, we have to chalk that up as bearishness. And because this candle that we see today was not a really bearish candle, right? Technically, this is just coming back to a level of support. We could hold this level and bounce, but the market responded very poorly to this. So yeah, just keeping it very simple. Basically what I'm saying is, if the dollar does not break above levels of resistance, then we can't really just think about like, oh my God, wow, it's so strong. Okay. I hope that makes sense. I'm pretty sure. Just let me know in the comments if that made sense. Yeah, we talk about this almost daily. So yeah, I hope hope my explanation made sense. But now I want to really, really take a look at Tesla, Nvidia, and then the overall market, and basically what the next steps are, how much more room we can go in the indices and the large tech stocks. So quickly, just take a look at Tesla. Tesla, big reason why we were bullish. We were holding on to Tesla calls Sold them at like 229 for about like 30% gain. I'm sure they're up much higher now, but you don't go short. You don't go short when these stocks are showing big drops like this. I was explaining to you back here in April what was going on with Tesla. They tried to make things look really bearish here. You know, we were clearly trading outside of the lower level of the Bollinger Bands, and then we made new lows. And then once we made those new lows, a lot more people became bearish, but that ended up being the low of the market. So you have to keep that in mind. When things look extremely bearish, when it's the toughest to go long, that's when you go long. And basically that worked out, right? Same concept with Nvidia. I was explaining Nvidia. Literally, guys, when this was happening, I was explaining I wanted Nvidia lower. I wanted it to open lower. And what ended up happening, that was the low. And we bounced very dramatically. So that was Nvidia and Tesla, right? So Tesla was up huge today, right? It was up over 7%. Cool. So overall, I was saying that we had to be bullish today because the dollar was showing weakness and because Tesla was very overextended to the downside like this, according to the Bollinger Bands, as well as the SPY, the NASDAQ, and the Russell. They were all opened outside of the lower Bollinger Bands and bounced. And I said, when we open like this on any of the large indices and we open like this outside of the Bollinger Bands and paint a green candle like this, the next candle should be bullish as well. And that's exactly what ended up happening. So then today, I was saying that we at least needed to close above 438 on the SPY. I was saying that I would be very shocked if we didn't close above 438. And we ended up closing above 438 clearly. Now, the next real level of resistance now basically on the market is going to be 441. If we can break 441, then the 442, 443 level is going to be very strong on the SPY. That's literally 441 is really going to be a very important level. And I mean, so we could take a look at the NASDAQ. Obviously the NASDAQ had the biggest bounce because the large tech stocks were the biggest losers, and we got a substantial bounce out of the NASDAQ and those large tech stocks. So, you know, relative to where the SPY is, the NASDAQ is doing well, right? But the main thing that we're basically looking at is the SPY 441. Honestly, that's if we close above 442, 443, that would be pretty shocking, actually, on the SPY. I mean, it wouldn't really be that shocking, but it would be very strong. So it would be a strong close. It would be difficult to start being bearish. Yeah, you know, pretty interesting spot. But basically, for now, whatever happened today worked out. Moving forward, we need to see how the SPY responds at 441. The 441 is really like the main levels on the SPY right now is going to be 442 to 443. That's the main thing that we're basically looking at. Like 440, obviously, that's a very psychological level. You know, 441 is also actually very important, but 442 to 443 is going to be like the top of this potential bounce. If we can break above that, then things can be interesting. But that's going to be the main thing, obviously, moving forward. And yeah, you know, and real quick, I think Bitcoin is taking a huge dump right now and it's not recovering, primarily due to the Chinese markets taking a huge dump. And as we know, basically the Chinese markets, a large percentage of Bitcoin is mined in China, and China holds a lot of Bitcoin. A lot of Chinese investors hold Bitcoin. So with the Chinese markets taking a dump like this, it's inevitable that a pullback in Bitcoin ends up happening as well. And this was only about a 10% drop. Yeah, 11-12% drop. So unless, and I mean, not even taking into consideration the Chinese markets are like all of the different problems that they're having with Evergrande, or the construction companies that are filing for bankruptcy, everything that's going on in China. There's a bunch of messed up situations going on there, and that is definitely causing Bitcoin to drop. And yeah, it's holding 25K, and the Chinese markets are starting to look a bit overextended to the downside. If the Chinese markets end up bouncing back to 18.3, it's going to be interesting to see the sensitivity of the Chinese markets to Bitcoin now moving forward. So I think it would have more of a relationship with that the bonds have. So the 30-year bonds have on the market in a weird way. Where if the Chinese markets begin to break above major levels of resistance, maybe that strength would start to translate into Bitcoin. Because right now people are taking money out of Bitcoin to fund their positions in the Chinese stocks positions that they're holding, or they're taking it out because they're not confident in what's going on. So if the Chinese markets can substantially bounce and break above levels of resistance, then I think that people start piling back into Bitcoin. Chinese investors start piling back into Bitcoin. But yeah, regardless, today was a pretty easy, nice day of trading. We just had to blindly be bullish. Tomorrow, though, might not be as easy. It could easily be a lot more choppy tomorrow. Basically, the level of support is 438, right? And if 438 can hold, we can continue to test 440, break above 440, then 442, 443 is the major level of resistance on the SPY. All right, so I hope you guys enjoyed today's video. I hope I made I hope I made sense with the explanation of the dollar. But yeah, aside from that, I hope you guys enjoyed today's video. Please make sure to like, comment, subscribe, do all that good stuff. I'll see you guys bright and early tomorrow morning. Thank you. Have a good one.